Welcome to the last edition of Chairman's Briefing in 2024. I'm Rachel Lee, and this episode is brought to you by Midnight Sun Mining. Let's get started. Gold markets witnessed history in 2024. It blazed through trading screens with a stunning 30% rally. With the exception of a post-U.S. election tumble, gold's climb was marked by powerful surges, shallow retracements, and unrelenting accumulation. This remarkable performance stemmed from multiple forces. Central bank buying emerged as a powerful driver, and geopolitical tensions sparked safety-seeking behavior. Interest rate expectations shifted market sentiment, yet China's role stood out as particularly dramatic. Mining legend Pierre Lassonde highlighted this impact in April. Quote, "The marginal buyer of gold is no longer the U.S. It's no longer Europe. It's China." The nation of 1.4 billion people now consumes more than two-thirds of the world's annual gold production. The demand impact became crystal clear in Shanghai's gold markets. Chinese buyers paid premiums soaring to $89 per ounce, which is dramatically above the usual $7 premium. Now, despite the frenzy that gripped physical gold markets this year, gold stocks painted a starkly different picture. The VanEck Gold Miners ETF, also known as the GDX, barely ended the year on a positive. This lackluster performance stood in sharp contrast to gold's record-setting rallies. Major gold producers disappointed investors despite having the wind at their backs. Where the junior arena is concerned, in an early February briefing, we observed that an outsider looking in might characterize this current landscape as an, quote, uninhabitable wasteland. As the year progressed, there was hope for an across-the-board re-rating among the junior equities, especially in the wake of buoyant metal prices. But a broad-based rally failed to take hold with any meaningful momentum. There are indications that fortunes are about to change in this beaten down and neglected sector, evidence being the unprecedented wave of consolidation in 2024. Resource giants opened their checkbooks with increasing urgency. The story began in February when Chinese mining power Yantai Gold outmaneuvered Dundee Precious Metals and took out Osino Resources for its advanced stage Twin Hills Gold project in Namibia in a $368 million cash deal. Spring ushered in a flurry of strategic moves. Alamos Gold elevated its status among Canadian producers through a $325 million acquisition of Argonaut Gold. Australia's West Gold Resources flexed its muscles with an $808 million takeover of Karora Resources. This acquisition elevated West Gold's rank to mid-tier status with annual production in the neighborhood of 400,000 ounces. The deal-making intensified when G Mining Ventures moved to acquire Reunion Gold's Oko West project in Guyana. The $875 million acquisition, which was structured entirely as a share exchange, highlighted the value of Reunion's Guyanese gold discovery. Towards the end of April, mining behemoth BHP shocked the market with a lofty bid to take out Anglo American in an effort to gain greater exposure to copper. Anglo's board ultimately shot down the $39 billion opportunistic bid, but there's speculation of BHP taking another run at the copper-rich producer. In June, Paladin Energy took markets back with a bold $1.14 billion bid for Fission Uranium's Athabasca Basin assets. The deal sparked immediate controversy. Shareholders initially resisted the offer, but more significantly, Canadian government officials raised national security flags over the strategic uranium assets. The drama intensified as debates raged over foreign ownership of critical minerals. Yet Paladin persisted. After months of negotiations and regulatory scrutiny, the Australian uranium producer finally secured its prize. The successful takeover created a new global uranium powerhouse with strategic assets spanning Canada, Namibia, and Australia. Yet summer delivered the year's most dramatic headlines. Mining titans BHP and Lundin Mining joined forces in a historic $4.5 billion acquisition of Filo Mining, a deal that electrified the copper sector. Goldfields followed with another blockbuster deal, a $2 billion takeover of Osisko Mining's high-grade Windfall project. While major miners are spending billions to acquire choice projects, most junior mining stocks are still trading at bargain prices. The proof of value lies in deals like Filo del Sol and Windfall. When Gold Fields paid a striking 55% premium for Cisco's Windfall project, it revealed just how valuable these assets have become. For investors who are watching this space, remember this: the gap between current share prices and takeover values suggests significant upside ahead. The autumn months brought no slowdown. AngloGold Ashanti expanded its empire through a $2.5 billion acquisition of Centamin, a move that bumped AngloGold's annual output to roughly 3.1 million ounces, elevating its rank among the gold-producing bigs to number 4. First, Majestic Silver strengthened its Mexican portfolio by absorbing Gatos Silver in a $970 million transaction, while Core Mining secured one of the world's lowest cost and highest grade mines through its $1.7 billion takeover of Silvercrest. Then, the last bit of pumpkin latte season closed with Rio Tinto making its dramatic entrance into lithium. The mining giant's $6.7 billion acquisition of Arcadium Lithium at a striking 90% premium proved that major miners would spare no expense to secure critical minerals. By December, regional consolidation continued. Agnico Eagle expanded its Quebec presence with a $204 million takeover of O3 Mining. Now, will this trend in M&A continue into 2025? Will it accelerate? And will your portfolio of hopefully high-quality juniors see a meaningful re-rating? Keep in mind that every day a producer is open for business, every day that it digs ore out of the ground, it reduces its mineral inventory. And it needs to be replaced to keep the business running. Our bet is that this M&A activity will continue, it will accelerate, and that a substantial re-rating in our portfolios is on deck. We'll close with our favorite quote by Doug Casey concerning these turns. Quote, "When the psychology of the public changes, it's going to be like trying to funnel the contents of Hoover Dam through a garden hose." Midnight Sun Mining has secured the renewal of its Kazhiba exploration license in Zambia. This announcement resolves uncertainty over this asset. In a press release, CEO El Fabro outlined what this means going forward. His team, who is working alongside First Quantum Minerals, is now fully focused on a multi-target campaign at Kazhiba, aimed to define near-surface oxide copper mineralization just kilometers from Africa's largest copper complex, the Kansanshi mine. Midnight Sun's strategy is compelling. Success at Kazhiba could create a fast track to production. This would provide Midnight Sun rare leverage, which is potential cash flow to fund deeper exploration without diluting shareholders. And that's all for this briefing. Happy New Year, and thank you for being a part of Chairman's in 2024. We'll see you in 2025.